What we're gonna do today is I'm gonna talk about some of the lessons that I've learned with trading, with options. Welcome to the room, Melissa. Just over the past years, I've been trading and been in the market for 13 years. Options has been about 7 years, and there's a lot of things that I've learned. And so I'm doing this so that, of course, the money that I've lost, I can help y'all avoid losing some money from things that I learned. Money that I've made, I can help y'all make some money with things that I learned. So I'm gonna go over some things. It's very open formatish. So I have some points that I wrote down from my own thoughts and experiences I'm gonna share. But y'all are welcome to throw questions in the chat at any time. And we're just gonna go ahead and roll into it. So, on a broader sense, before we come down to actual trading, because strategies and all of that is very independent, right? Everybody has different goals, everybody has different risk profiles, everybody has different capital. So, we're not going to dig too deep into strategy specifics. On a broader sense, one of the first things that is important when I was getting, decent with trading is knowing and playing my role. All right. And so with that, you can think about if you're into sports, you might understand Shaquille O'Neal, right? You might know about Kareem or, big men in the paint, right? Shaq wasn't shooting threes. And this is one of the things I teach people all the time. Like, Shaq wasn't shooting threes. Shaq was down low. And if he was trying to shoot threes, he wouldn't have been Shaq. We wouldn't know. Right? You have to know and understand what you're good at and what you're equipped for. Shaq was equipped for being a big man, blocking, dunking, power, right? Michael Jordan, arguably greatest sports player, basketball player of all time, switched over to baseball. He wasn't so hot. He switched back to basketball, won three more rings because he went back to staying in his lane. So with trading, you have to understand not just what you want for yourself, but also understand where you're at. All right. What I mean is when it comes to trading, we have scalping, which is where you're entering and out of trades within about 5 minutes or less, 10 minutes or less. Right. Very high paced, trying to catch a quick move. You have day trading where you're in and out of a trade same day. Swing trading where you're in and out of a trade a day plus, right? So maybe 2 days, maybe an overnight hold, to maybe 3, 4 weeks, maybe a month, right? Where you're swinging something. And then we have position holds and leaps where you're in positions longer. And so you have to understand yourself so you don't screw yourself because the market doesn't screw over anybody, really. People love saying it's the market's fault, Trump's fault, whatever. You got to take accountability for yourself and understand that, hey, my name is Jordan. I know I have a gambling problem, low key. Like, I want to make a quick buck. I want to, you know what I'm saying? And so, if that's my personality, if that's how I am, I could work on that. It is what it is. But trying to day trade when I know that I like thrills, when I know that I like to be aggressive, I like the idea of trying to make money fast. Trying to day trade or trying to scalp is appealing to me, but because of how I am in that environment, I'm going to mess up. You lose a trade and you're like, crap, I got to go get it back. Now you're not thinking straight. You lose that trade. Now you're like, oh man, now I got to really go get it back. Okay, let me lock in. Let me lock in. All right, you start losing money because you're chasing, you over trading, you revenge trading. All right, you have things that you're seeing and you're watching Apple or you're hearing about Tesla and Tesla starts moving. And then you have the FOMO, whereas I can't miss it. I gotta make some money. Tesla going up. I gotta get this banger. I'm hopping in Tesla. All right, you moving too fast. And usually those are the things that cause us to burn out ourselves and burn our accounts because we need to understand what role we need to play for that time. I started off long-term investing. That was before Instagram was a thing and people were like, doing all the stuff that you see now. I thought I created swing trading because I had companies that I was seeing go up and I'm making money. Then I keep holding, I lose money. So I'm like, man, forget this. I'm selling when it goes up. I thought I created that. I didn't. It was a thing. I I transitioned into day trading because I saw all these people talking about day trading. Problem was, I worked in an office at a desk with important confidential information where I couldn't be on my phone at my desk. So I'm trying to day trade from the bathroom every 30 minutes while I'm at work. It ain't work out. I lost a lot of money, right? Trying to force myself into something that wasn't really fitting for me at the time. Go back to swing trading, things are good because I'm sticking into the role that I need to be in right at that moment. When I left my job, I was trading with people and they were like, bro, just day trade. You don't got to go to work. You could trade it. You making money. I would be making money during the day and then holding it because all I knew and identified with was swing trading. And then I'd be losing money the next day because the stock done flipped. So people I was training and working with, my team, bro, just close it. All right. So I transitioned back into day trading, went to scalping, high paced. I got addicted. All right. I'm in the gym scalping SPX, zero DTEs in between sets. For y'all who don't know, that means that yeah. What? What that looks like in reality is I hit a set of bench press and then I throw $1,000 on a trade that can go up and down by $100 every couple of seconds. And I'm trying to do that in between my gym session. I'm walking around on the track trying to cool off, and I'm on my phone like, okay, I'm in, I'm out, I'm in, I'm out. It it wasn't right for me. Some people scalping SPX, that's their thing. It works for them. They're killing it. I made money doing it. Yeah. I lost some money sometimes. Yeah. I probably came out net positive with that. But it was stressful. It was hella stressful. And so before we move to the next point, one of the things that I go over with everybody I work with and talk to is figuring out what's ideal for you and catering what you do around that. And I got to give a shout out to Kim. Kim is somebody who's helped me a lot because she planted seeds like that. And so when I thought about that, I'm like, okay, yeah, I don't want to be trading all day. A full-time trader doesn't mean I need to be doing it full time. I did it. Hey, that was one of my best days. I made a little over $5,000 in a day. But I had a crazy migraine and I felt like crap the next day because I was sitting in front of my computer all day staring at the charts. Wasn't healthy. Good money, but it wasn't healthy. And that's not what I wanted for myself. That's not sustainable. That's not something that I want to regularly do. That's not how I wanted to live my life. It wasn't worth it. And I just because I made that money that day doesn't mean I would guarantee. And all right, so I can't be delusional and think I'm automatically gonna make $5,000 a day. All right, so point one is know your role, know yourself, know your own roadblocks, know how you think, and know what's best for you as you maneuver through your trading journey. And what works for Robert is going to be different from Jalen, it's going to be different from Ray, it's going to be different from Jordan, because we all have different personalities. We all have different ways we think and feel. All right, so assess yourself. The next thing is measuring what matters. All right, and all of these things tend to extend outside of trading, but they impact your trading heavily. It's just like if you're gaining weight and you know you want to lose weight, well, why are you gaining weight? Well, I don't know. If you're not tracking what you're eating, you don't know what it is that's causing it. You don't know if it's the time of day that's causing it. You don't know if it's some days you eat big, some days you don't know. If you go into the gym trying to build muscle and you see your biceps getting big, you're like, oh, I'm looking good. But you do 10 different exercises for your arms. Which one is the one that's helping you grow? You don't know. Right? Same thing happens with trading, where we're not tracking what's happening. Our accounts going up and down. You up 1,000. Next week you're down 500. Next day you're up. You're down. You're up. You got a roller coaster portfolio. Do you know why? Do you know what strategy is working out for you? Do you know what strategy is the hindrance to you? I've had calls with people. Some people actually are on this call right now, where did you notice that when you trade this one stock, it accounts for like half of your losses? Did you know that when we're looking at your trade log And when you day trade, that's where most of your losses are. But when you hold stuff for 2, 3 days, you end up being right and making money. But you fall into that urgency, like I want to get it right now, and that's what throws you off. Dig deeper. And this is so important. You dig deeper. Okay, we see it's the swing trades, but it's the swing trades on breakouts on stocks that are already above the 200 moving average. I know I got a little technical there. All right. Those are the ones that are contributing to your gains. But then you give them back trying to day trade reversals because these stocks are overextended. They should drop today, but they didn't. All right. That's something I did that last week. I made some money. And I was like, ooh, Google should drop, but did not drop. SPY is overextended, did not drop. It's like, you know what, Jordan? Coach yourself. Let me stop trying to day trade these things right now when they're not even really aligned. Stick to what's working. All right. So measure your trades, measure the strategies, measure the time of day, track where you are when you're trading, track the environment when you're trading. These are all things that sound simple and it's easy to brush off. That stuff makes a difference. I bet you nobody in here could say that, hey man, when I'm running off of 2 hours of sleep every day, I feel great. All right. When I get a full day of rest, I don't know how I be feeling. No, you know that when you get more sleep, you be feeling good. When you get less sleep, you be feeling bad. You know that your decision making is different, right? All these things matter. Same thing with your trading, right? Trading in a house full of kids running around is different from trading in your office, in your room with your laptop in front of you, got your setup. All right. Same thing if you work remote, you probably can understand that certain environments it's easier for you to be successful. And that's something you need to pay attention to. You notice it sometimes when it's too late. You could have made more money had you been paying attention earlier. Your best days come when you at the library instead of at the house. All right. So track that. Number three, accountability and slowing down. Again, still outside of trading, but also inside of trading as well. One of the biggest things that contributed to my success with trading is the fact that even before I had the Discord group, I made what I was doing known. So I had somebody who I taught, who was close to me, that I taught to trade. And so he was learning from me, but also as I'm teaching him, but he's also watching me. Hey man, this is going to be my strategy for the next 30 days. I'm testing this out. Oh, I just took a trade on this. But Jordan, that's not the strategy you just said you were going. You right, right? Having that keeps you aligned because we know on our own, I don't know about y'all, I've had goals or New Year's resolutions and things that I didn't stick to. And some of y'all might be perfect and y'all I never did that. Not me. Right. And it's a lot harder because we know sometimes you can't trust yourself to stick to the thing that you said you was gonna do that's the best for you. You don't do it. You say you're gonna wake up at 5 a.m. and go to the gym, you don't do it. You say you're gonna whatever, eat better. You like it's you just at the end of the day, it's hard to just trust yourself. But when you have a group of people who are like, hey, we're all going together to the gym at 6 a.m. Yeah, you don't feel like getting up, but you know they expected me to be there. I'm not just letting myself down, I'm letting them down too. And it might be that it's more fun when you with them, and it might be that it's easier and when you're with them, right? That accountability makes it easier for you to be successful. Another thing I did was I made my trades public. So I had a spreadsheet, put it on my Instagram. It was in my bio. You could see literally what I'm taking. If I'm up, if I'm down on it, don't care. All right. Some people might have thought it was fake or whatever. Doesn't matter. But for me, knowing that what I'm putting out is going to be seen, I'm thinking twice before I make a move. When I have my Discord and I'm calling out trades, all right, some of y'all in here were there. I know that. I'm calling out trades. It's 12,000 people in this group. When I put something out, I know that people are putting their money behind it. So if I say I'm buying Apple at this price and I'm targeting this price and my stop loss is this price, I know it's people putting money on that. and I care about people. So I don't want to throw something out that I haven't done my full due diligence on. Is it guaranteed? No, nothing is guaranteed. But I'm taking extra steps and being more slow with my process. Hey, let me double check this. Okay, I see all the reasons why it could work, but what's the case for why it wouldn't work? That's something that we don't do. We just always think about why it could work. Why could it not work, right? So, thinking slower, slowing down, whether you have a trading buddy, whether you're in a group chat, whether you send it to me, whatever, but having a process where it's not just you left to be on your own, but you have somebody to fall back on or have somebody to bounce an idea off on. Or I don't know if y'all know how sometimes you could just talk to somebody and you don't even need their response. You just get clarity from talking to somebody about it. All right. Have that. It makes it easier. And the thing is, this is your time and money. So why not? Why not? All right. So again, that was number three, right? Accountability, slowing down. Number four, another huge one. Again, shout out to Kim. Oh, four and five is continuing to learn from yourself. Now, in the beginning, you don't know anything about anything. Yeah, you need to read, you need to do your research, Google this, that, and the third, right? Because you don't know. At a certain point, it's less important to go and try to find a new course and try to find a new group, and more important to look at yourself, assess yourself. What are my strengths? What are my weaknesses? Where am I dropping the ball? What could I improve on? If you don't know the how, okay, cool. Now I go to somebody. Hey, Jordan, I know I'm having this issue. How can I fix it? What's worked for you? Whatever. And I chop it up with you. Right? Here's what's worked for me. I worked with Ray. Here's what worked for Ray in that situation. Whatever. Right? So go through that assessment with yourself when you're measuring your things, you're reviewing your stuff, you're making your adjustments, you're giving yourself a plan to make the changes that you communicate to your accountability person or to the group or whatever you do so that you stick with it. And then you continue to learn from people who are higher up as you go. One of the things that I got from a guy named Mike, Kim put me in connection with, I was doing great. I already quit my job. It had been like 3, 4 years. And I knew I didn't really have more people to really learn from. Not like I'm just high and mighty and know everything. I don't. But at certain levels, there's fewer people who can really help you get to a higher level if you want to go to a higher level. Mike runs a hedge fund. At the time I met Mike, he managed about $18 million at the hedge fund. Mike taught me his philosophy of two key things. One, taking less trades. Two, getting more out of the trades you take. That made a huge difference for me in my trading. Because when you take less trades, it again requires deeper thinking, more focus. All right. One. Two, when you focus on trades that can give you the bigger return and make more on less trades, you not only have your time back and your mental space back, but you can do less. The goal isn't to have the most trades in the world. The goal might be to just, hey, if I could just make $3,000 a month, that'll cover most of the basic bills, and then there might be some left over. Okay, cool. If I can make that off of one trade instead of 20, why not? Right? And so for y'all who follow me or been following me for a while, y'all will see that sometimes I post trades to my Instagram very rarely. I will put an actual post and leave it up. My name on it is getting whatever 14,000 views. People are seeing that Jordan said these stocks, these prices. Right? Again, that's the accountability. But the reason I do that is because I'm working on myself. Hey, these have great potential to run. And that way I could trade less. Right? So slowing down, doing less, once you learn that the majority of your success is coming from certain things. I learned that a lot of my money would come from catching big bottoms, catching big tops in the market. All right, SPY overextended. I buy a 6 month output. Hey, cool. I'm done for the month. After that hit, it hit in the first week, it hit in the first 2 weeks. I'm done for the month. I'm done for the next 2 months. The money's made. I don't gotta do anything. All right. So now you can go and live life. All right. So just make sure that whatever your goal is, you keep yourself focused on the goal and not just the trading hype, not just wanting to take a bunch of trades, not just the dopamine of action, but what makes the most sense for true progress. Okay. Now, if y'all got questions about anything, y'all can go ahead and put them in there, put them in the chat. All right. We're going to start shifting over to some of the things with trading. Okay? So, with trading, one of the biggest things with trading that has made me better with options specifically in the assessment, in the measuring. I had a chat with somebody in Instagram DM earlier today about this. They said, it feels like I always know which way it's going to go, but I get like a 2 week out contract. It doesn't move my way. And then after my time is up, my contract's expired, it goes what I was expecting it to go. And I've heard that same situation a lot. So being able to identify the solutions to your problems comes real simple. There's three main things I told them that I took away just from that quick statement. One, you're focused on how much money you can get in a quick amount of time. Because with options, you get paid more the faster the stock moves. Right? The sooner it makes the move that you're expecting it to make. So if you're giving yourself a 2 week window, you're trying to get quicker money because you get paid more if it moves in a 2 week window. Other thing is your entries are late or early rather. If you're getting in and it's not moving until 2 weeks after you're in it, you rushing your entry. All right. So these things are different things that you can fix and address. The last thing is you're not giving yourself enough time cushion. All right. So I told him was, man, sounds like you're losing $10 trying to get $10 instead of being satisfied with 5. Give yourself the extra time to make sure you have the success instead of trying to get it as fast as possible. Okay, your entries, that's a chart thing, but slow down and look at them. Go back and review your trades. You don't have to take trades every day. You can go back and look left doesn't just mean look left when you're setting up a chart for horizontal support and resistance or trends. Look left at your past trades and see where you could have done better. It's like watching tape, reviewing phone calls you had if you're on a phone-based business or job. Review what you're doing, see where you could have been better so you can make the adjustments so you don't keep making the same mistakes. So you're not sitting there 3 years later saying, dang, why am I not making progress? I know like it hurts to say it. Nothing comes fast but a crash. Somebody said that before. It hurts to say it, but or it hurts to hear it, but you can live in this cycle of you started trading in 2020, it's 2021, 2022, 2023, 2024, 2025, and now you have nothing to show for it. What do you have to show for it? Do you have profits to show for it? Do you have newfound wisdom with trading to show for it? Do you have a bunch of courses and group chats that you like? What do you have to show for it? And the easiest way to fix that is looking at in the moment and making the fixes on where you're going wrong. And again, if you can't figure it out, that's when you talk to somebody where you assess, hey, my name is James. I'm in the same spot I was in my portfolio the past 3 years because as soon as I start making good money, I get too confident and then I fall off. And I'm not saying this is you, James. I just looked and saw you on the Zoom. All right. But I get too confident when the money starts coming in. And so then I don't do my full process anymore. I'm on a streak. And so I'm like, oh, yeah, I'm everything I'm doing hidden there. Give me, we on that. Put money on that. That's about to magic, baby. I shoot it, it's going in. And then you miss. Right. And that's the continuous cycle. You miss, you miss, you miss, you miss. And then you're like, nah, bro, I got to lock in. All right, let me go see what Jordan been posting about. Okay, let me go study. Okay, let me go read. Okay. All right, I'm locked in. I'm focused. Now, mine is a steel trap. Then you start having success again. Win, 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 win. Now I'm top dog, baby. You can't tell me nothing. I call it out as cycle repeats. Right? Another situation. And these are just real situations. I don't know your situation, but real situations. Trading with money that you can't afford to be trading with at the time. Causes you to trade out of desperation, fear, lack. All right, when you're trading with money and you know you got bills to pay with that money in the next 2 weeks, you trying to get a quick flip. Hey, I need to make a quick $500 to pay this car note. You start being overly aggressive. You hopping in stuff you ain't have no business hopping into. You taking zero DTE trades, same day expiration, riskier trades, trying to get a higher reward. And when it gets burnt, now what are you left with? Oh well, now that 500 down to 250. But if I can catch this one trade, oh, I seen Jordan put this out. I'm gonna put the whole thing on. I'm put all the money on it because it's a Jordan trade. That'd be the one Jordan lose. It's happened. I wouldn't be telling y'all if this hadn't happened before. Now you can't pay your bills. You don't blame Jordan. All right. So this is reality. These are real things where you have to assess with yourself in your unique situation how you need to improve, how you need to shift. Don't let your next year be the same as last. One of the again a huge thing that's made me better in life and in trading. Yeah, keep asking questions. I see that. One of the things that's helped me become a lot better and further in life and in trading is shortening the cycle at which I learn from myself. I don't wait till December to be like, oh, let me review my year and make some resolutions. Why would I stay in the same cycle for that long if I can already identify it? Why would I wait till a new for what? I'm not waiting till the end of the month to be like, oh, it's a new month. Okay, now I'm gonna start fresh. Oh, it's a new week. No, no. If I'm identifying that today, I took 5 trades today. They were all losses. Jordan, why? Why did you take those 5 trades? Why were they losses? And what can you change about it the next trading day? Right? There's no reason to stretch it out a week, a month, a year, where you're doing the same process, living the same loops. Okay? So like think about that. Think about it. I change your identity. Another thing that you can do, and these again are small things that make a big difference when you do them. Trust me, I've seen it. I've seen people who came in to working with me or in a group inconsistent. And then when they're done, literally, bro, I can make $8,000 a month whenever I want. And I've seen it. Like, yo, you're good, my guy. Like, work is done. Right? Because that's because they're doing these small things. We got a question. What if I've been waiting for a stock to hit a certain level and pre-market it hits that level and runs into the open? Is it best to skip it? So if you're waiting for something, right? If you're waiting for something and it hits before you can take action on it, a couple different things you can do. And this comes to your ability to adjust live in the market. One, you can wait for it to return to the price you wanted it at. All right. Hey, I might have wanted a flat screen 80-inch TV. It was on sale for $500. I missed the sale. Now it's at $1,000. I could go get it for 1,000, or I could wait till Black Friday. All right. Was now got two different situations then. Okay, I could wait, or maybe it don't come back down on Black Friday. Right? Very real. Okay, there's other options. All right. So that's your other thing is if you miss it, There's other stocks out there. There's other trades that are available. You still build your plan out. The reason that you'll have a watch list of multiple ideas is because one might go before you can take it. One might not trigger. All right. The reason when you ask somebody, hey, when you ask a woman, hey, what you want to eat? And they're like, I don't know. What you thinking? And you give them multiple options instead of just one, because you know the first one you throw out is, no, I don't think so. No, I don't know if I want that. All right. So you say, hey, look, here go three or four different things. Right? Now, one of them was gonna land and we good to go. there's no there's no need in trying to do one and back and back. No, 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 no. All right. So I just use that example because you get it. Like y'all can understand that. So when you're doing your watch list, I would say, yeah, have multiple stocks you're watching, different entry levels. If one goes, it goes. All right. Wait for a retest. Exactly. Thanks for putting in the chat, Ray. That was a question Ray asked me a while ago. Same scenario. Literally, the reason I'm doing Zooms like this is because same questions affect different people. All right. So y'all can keep throwing questions in the chat. Y'all can honestly unmute if y'all want. Throw questions in the chat. Unmute if y'all want. I'm gonna keep going until somebody stop me and interrupt me for right now. All right. Rolling. Oh, fire.
Going back to that question the young lady asked, a lot of times if you have a TP, for me, if I have a TP that if and it hasn't reached it, I just look for another entry if that TP still hasn't been hit, or if yeah, but if it passed the TP, I ignore it. I let it go.
Yeah. I'm with it. Because you do have options with your entries while you're in trade. So we could talk about like mid-trade management. Right. When you enter a trade, let's say your target is 100, the stock's at 90. Your stop loss might be 85. Okay, cool. Targeting $10 move, stop loss is 5. You got a risk to reward of 2 to 1. So when you're in it, the risk to reward is constantly adjusting. All right, as the stock moves up 91, 92, 93, back down to 90. All right, it changes, it adjusts. So like Ray said, hey, it might be going up and then it pulls back. Now you have a bear flag. Now you have a retest. Now you have whatever different thing that makes sense and you can adjust your setup. That is one option. But this again goes to knowing your role and knowing yourself. For some people, it's better to keep it black and white, clear cut. These are the 5 rules. And if it's not those 5 check boxes that I can tick off, it's a no go for me. Because I know me personally, I like to go off script a little bit if I got that wiggle room. And I'll start doing I'm just feeling the vibes. Right. And then stuff might go wrong. Some people, hey, okay, I have plan A and I got plan B. This is plan A, pre-market breakout, whatever the plan is. If that doesn't happen, here's the alternative. Okay, it went through my level. If it comes back down a little bit to this spot, I can get in. Here are my new numbers. Here's my adjustment, my audible. All right. You have to know yourself and you have to track how it impacts you. When you're tracking your trades, how many of your trades did I stay true to plan? The ones that stayed true to plan, how'd they go? The ones where I adjusted on the fly because it felt good in the moment, or I was like, man, I got to figure something out. How did those go? And then you'll have like a clear answer of, nope, I need to be one of the people that sticks to the A. It checks. I got my little thing right here. I'm checking them off. If they don't meet the checks, it's a no go. Or you can be more flexible. All right, those come with learning as well. That was a good question. So as you learn with time, you get better with that. Yeah, ask some more. Feel free. And thanks for adding that in, Ray. I know on Instagram I put up what questions y'all had or wanted me to talk about. One of the things was about Fibonacci's. And again, I said I'm not going to go too deep into strategies because everybody's different. Oh, but with Fibonacci, what I could tell you from, and just text me, bro. We can hop on a Zoom anytime. Uh, with Fibonacci, one of the biggest things is the patience. All right, Fibonacci, for those who don't know, is just a mathematical set of numbers based on a big move where you're looking for it to have a chance to come back to predetermined points. So it would be like if the stock went from 50 to 100, well, hey, there's a good chance that it'll bounce if it comes back to 75 or if it bounces at 50. All right, and from there, you can base out potential targets from the retracement percentage. The important thing is making sure that you're patient and letting it come to you. I say that's another thing that makes you a better trader is letting it come to you instead of you going to it. All right. I'm gonna give an example. I gave one of the guys I coached. It's gonna be a little, I don't know how it's gonna come out on the Zoom, but I was telling them, letting it come to you, you have a better chance of success. If you go out and you just start walking up to pretty women, you might get some hits, you might get some misses, right? Depending on how you go about it. If you see a woman that's looking at you and you catch her eye and y'all, you know what I'm saying, you had that little moment, y'all know what I'm talking about. You know what I'm saying? Right? Like you have the green light. She had already been like, hey, come talk to me, you know what I'm saying, with her eyes. All right. So letting it come to you doesn't mean that you're gonna fully succeed on whatever the situation is. You might just not know how to talk. But in this case, don't know how to trade. But you have a better chance of having it play out in your favor because hey, my level was 100. I waited till it came back to 100. My risk to reward is better. Everything is set up how I prefer it to be versus chasing. All right. Let it come to you, attract rather than chase. Other questions in the chat. Fire off. Journaling is a real thing, but you don't do that. Mentally, I go over my trades, see what I did wrong. I need to write my ideas down. Yeah, it makes a difference, man. It makes a difference because you think you know. A lot of times we think we know, and it's funny. Now, there's another exercise I've done with people, and y'all could probably imagine it in a sense. But I've been like, man, just set a timer for 3 minutes. Don't look at it. Or set a stopwatch rather for 3 minutes. Don't look at it. And then just go and turn it off when you think 3 minutes is up. And it'll be 4 minutes. It'll be a minute and a half. All right, like we could barely get that right. Even if it was 10 seconds, might be off by a second or two or three. And so if we off by a little bit with that, think about with our trades. We're like, oh man, I'm probably losing because I be trading this type of trade. But you forgot about those other two that were the bigger losses. But you didn't trade as many of them, so it's not fresh in your head. All right. So I'm gonna just recap real quick. Know your role, know yourself as far as how much money you're putting on trades, the type of trades you're taking, the length of time on these trades. All right, based on, hey, if you're a person who has anxiety about trades very easily, trying to trade every single day might be too much for you. It might be overwhelming. Doing something longer term would probably be better. Learn it and get good at that and let that be your money maker. If you're somebody who knows that you like being very optimal or maximizing opportunity, holding something for 2 years might not really be your cup of tea. Because in that 2 years, there are going to be up moves and down moves. So hey, I like stuff optimal. I like to be efficient. Okay, well, swing trade. Let me figure out in this 2 years of up and downs, what's the best point to get it for this 2 months, 2 weeks. All right. Know your role, play your role. Measure what matters. Journaling, tracking it. Again, you go to the gym and you get you get a big chest, you get strong. You don't know if it was the dumbbell bench press or incline press. You don't know if it was the push-ups. You don't know what it was. Track, what you're doing so that you can see what are the key things contributing to your success. You do more of them. What are the things that are hindering you? You do less of them. It's simple, but we got to actually do it. Accountability and slowing down. Share with somebody. Again, it could be a friend who doesn't know anything about trading. Just teach them enough to understand what you're saying. It could be me. It could be however you want to do it, a group that you're in, whatever. But have somebody who you're sending things to. You're like, hey, this is what I'm doing. Again, people in this room who I've worked with who have told me personally, I was about to do XYZ, and then this little Jordan popped up on my shoulder, and I heard him say, now come on. I was like, you right. All right. So make sure that you have something in place. See, Melissa, I wouldn't even think about you. Melissa said that was her. All right. It's multiple people because you need that. You need that. All right. So have that sort of accountability for yourself where there is some measure where it's like, hey, you said you was gonna do this. You said you were only gonna trade bullish in a bull market. You said you were only gonna trade swing trades and not scalp trades. All right, this is what you said. Stick to it so you can win and slow down. Mistakes love a rush decision. I know we all done left the house rushing, and then we realize we in the car and we're like, dang, I done forgot something. Dang, I done left my laptop. I done left the I got a scan to get into work, and I done left my little scan card at the because you rushing. Slow down. You slow down, you're less likely to make mistakes. You're less likely to make errors. Double checking things, just like when we was in grade school, and they're like, double check your work. I was never one to double check my work. I always wanted to be the first one done because I didn't want to do it. And then there were times where I get papers back, and I'm like, bro, I knew this, but I was rushing. All right. With trading, we don't want to do that. You got money on the line. You got $100, $500, $1,000 on this situation, on this opportunity. It's not worth it. I promise you, doing an extra 5 minutes to potentially save yourself $500. I'm pretty sure it's worth it unless you making $1,000 an hour or whatever the math is. It's worth it to do that extra 5-10 minutes to be assured of what you're doing. All right, and I see the questions in the chat. We're gonna run through them, but put some more in there. All right, and then less is more. Again, you don't have to overdo it. You don't get a prize for how many trades you take. There's no award for that. You don't get a bonus in the stock market for 100% accuracy or 100 trades this month. You don't. It's not. All right. You're successful. Hey, if your winners make more than your losers, you can come out on top. If we flipping a coin, it's 50-50 chance. But if you get $10 when you win, and when you lose, you got to give me $1, I bet you play all day. Right? That's that asymmetric risk to reward. It's worth it. So make sure that you're doing stuff that's worth it and you can trade less. You can go through your things and make sure you have fundamental, technical. Hey, these are the trades that I'm willing to put out. That was my point earlier. Is a lot of times the only trades I'm taking now are the trades that I am so confident in and I've done so much digging and research on that I'm like, hey, I will put my brand, my name, my face to this trade and put it on Instagram where I know people are going to put money on it. I know there's going to be people waiting to hop in the comments and tear me down and tell me I don't know what I'm doing and all of that. I know it's coming. All right. But I'm willing to go ahead and put that out there because I have that degree of confidence in this trade. Those are the trades that you want to be taking, not the ones where you half asleep and you ain't ate breakfast and one of your eyes is half closed and you just trying to make some money real quick. All right. Is there a strategy that's best to try for someone just starting out in options? Also, for starting out, is one easier than the other, such as day trading or swing trading? So, strategy wise, when you're just starting out, I would say the best or easiest way to go about it would be focusing on trend. Very simple concept, right? You can look at a chart and see which way it's going from left to right. Easy way to say, hey, this is going up or this is going down. All right. And then the next level to that would be looking at your areas of support or resistance. Say, okay, last time it was at this spot. Here's what it did. The only reason I'm slow to show charts right now is because I know this will real quickly turn into like a whole charting situation. I don't mind, but I have a tendency to get carried away on the charts. We can show some charts. Why not? All right, let me just do it real quick. Real quick, real quick, real quick. And then I'm gonna get off. All right, real quick. So if we look at this right here, all right, just this little piece right here, we see from left to right, it's going up. Right, clear, easy way to say it's an uptrend. Okay, it's going up. Now, if we look at, for example, spot like this, all right, so we already have started going up. Not the highlighter. We already have started going up here. All right, came back here, and then we took off. But what you notice is we came to this spot multiple times. It's about $8. We came here before. And when we come here before, we came here and bounced up. We came back and bounced up. So then we came back again and we're looking for another bounce up. All right. That's a simple 1-2 of how you would do that. But if you want to go more into it, we definitely can. But that I would say would be the easier way to do it. When it comes to day trading, swing trading, or scalping, the easiest thing when you're learning would be to do whatever has a longer time frame because there's less things that can throw you off. Right? So when you have a shorter term window for something to work, it's a lot compressed, it's harder. But when you give yourself room, it works well. All right. When you think about it, just to put it in perspective, you think about the stock market. The stock market has bear markets. We have downtrends in the market. I just paused to make sure I'm not lagging because I look like somebody stopped moving. Oh, okay. No, Robert's good. All right. So the market has days where it's going down. It has weeks where it goes down. It has months where it goes down. But as you expand those time frames, the frequency of times you can say it's going down decreases. The market's never had a 20-year span that's red, right? And so that's a bigger, example, but whatever has a longer time frame is usually easier for you to be successful and to learn from. While you're learning, you can look at the smaller time frame. Okay, let me see how it moves week to week. Okay, what about day to day? In that green day, there are going to be some red days sometimes. In that green month, there are going to be some red days in there. How can I, so this is the next level, how can I pinpoint or get a feel for when is it going to continue to be that green month? And that's what I just showed on my chart, where you had that is going up, now it's coming down, you get a little discount, and then it can continue. All right, so that's a good question. Now, if you have a follow-up question, like I said, ask away, bro. This is what we're here for. How do you pick which option contract to go with? Too many times I have the right analysis, but because it doesn't take off right away, theta eats it and triggers my stop loss. Okay. So, in terms of choosing a contract, for those who don't know, you have 5 Greeks in total, 3 main ones. It's going to be really 2 main ones. I'm sorry. You got 2 main ones. Your delta and your theta are your 2 main ones. Theta is just how much you lose on your contract because of time. And delta is how much your contract moves with the stock moving. What we're talking about here is theta. So think about an option contract kind of like milk. right? Or like milk, like food you just cooked, whatever. Something that, hey, is best early, and then over time is worse. It expires. That's how your contract works. So if you go and you get some milk, hey, on day one, yum, tastes good, perfect, milk, right? But by day 12, if that expiration date is whatever, by day 12, it's not so good. It might be expired. There is no more value. That's what happens with your contract. When you have a contract, you choose, hey, I'm thinking that Apple's going to go up in 2 weeks, in 4 weeks, in 8 weeks, whatever it is. So when I'm choosing a contract to go with, in this case, you have the right analysis, but it doesn't take off right away. It kind of goes back to the example I gave earlier is one, I'm not so focused on the contract itself, right? Because the problem here isn't the contract selection. The problem here is the timing. If your stock is moving the right way that you're expecting, but then the contract is expiring, then you have to look into how are you entering these trades? What are the trigger for the trades? How can you go a layer deeper so that you have better entry? So, for example, like we just said, right when I was answering Robert's question, a green month is going to have red days. The stock not going up every single day, typically. It's not going up every single day of the month, right? So, an easy way to have better entries is entering on the reverse of the direction you're thinking is going to go. If I'm looking for it to go up, if I enter on a day it's already going down, I'm already getting it at a discount automatically. I don't have to think about, hey, what if it pulls back? Because I'm already buying when it's pulling back. All right. So if my thesis is correct, I'm getting it on the discount. I'm getting it on the sale. All right. The other thing is, as you continue to get better, you can start going down further into the time frames. Okay, I'm looking at the daily. I'm looking at the 1 hour. I'm looking at the 5 minute. Because the shift has to happen and kind of cascade as we go through our time frames. We can't have that green month without green weeks somewhere in there. We can't have green weeks without green days. We can't have green days without green hours, right? So somewhere in there, that shift happens and it holds. And so what you would have to do is look at your trades and see where does that shift actually happen? Where did the breakout happen on the 5 minute that led to the breakout on the 15? That then led to the movement on the hour and the daily. All right, look at those type of things so you can have your timing be more precise. Wait for the pullbacks. Instead of buying it on the breakout, buy it when it's at support. All right, another game changer as far as risk to reward is I'm buying it when it's at support instead of waiting for it to break out the resistance. Because by the time it's breaking out the resistance, it probably needs to cool off at some point.
Mm-hmm.
But if I'm buying it at support, I'm already buying it on the worst day. If it drops through support, I already know the trade failed. I can just hop out the next day. I don't got to worry about it. If I'm right, which is what we're talking about, usually you're right, then it'll work out even better because I got in when it was at 90. By the time Robert gets in, it's breaking out of 95. We're both looking at it to go to 100, but I'm already in. See, I'm already in. All right. So it's some patience and it's working on your entry, bro. Right.
I have a comment about that. On his last line, he says it triggers my stop loss before going into the direction I planned. So are you basing your stop loss on a percentage or are you basing it on the structure? Because if you're basing it on a percentage, a lot of times you're going to get stopped out on some bullshit. So, that's something I think you should look at also, in my opinion. What do you think about that, Jordan?
That's one of the things we went over. Is I don't teach personally when it comes to options trading to trade based off of percentage for those reasons. Because as you know, patterns and price movement, A bull flag is when the stock goes up and then it starts consolidating, moving sideways or pulling back. And then usually it continues to go up again, right? But in that moment, if we know, again, our option loses value over time. So if the stock is moving sideways before the up move, I'm losing money before I close the trade, right? My percentage is dropping. And so I can end up getting triggered out the trade while the trade is still valid. Nothing about the trade, if I look at the chart, nothing about the trade says it's a bad trade. It just took 4 days instead of 2 days from where I got in at. All right. So I agree. That's the same way I explain and I teach is, man, if you can give yourself more time, then it also becomes a lot easier because you're allowing the trade to have time to play out. You're allowing yourself to have the more time to be correct, versus trying to just pinpoint exact to the T when it's going to happen. And you can let your analysis breathe.
Yeah. Don't do 10%, I'm gonna hop out, or 20%, I'm gonna hop out. Look at the structure. Because you'll get burned every time if you base it on percentages, in my opinion.
I appreciate it.
Thanks for answering that, Jordan. Appreciate it.
Yeah. Ask something else, bro. Like, we're here, and it's not just you that has questions, but they can help other people. Other people probably ask questions that can help you. Ask away, man. What are you dealing with specifically right now?
I'm trying to learn strategies and trying to decide which one would, I guess, not necessarily be the easiest, but maybe something that's more simple to understand. My friend suggested orb trading, ORB,
Mm-hmm.
Hmm.
and I've been trying to look into that. I mean, it makes sense for the most part, but when I used to try, about last year, I got into this. I just stopped for a while. But somehow it always went the opposite direction of what I chose still. So go figure.
You got something, Ray?
No, I remember when I was learning with you, what you gave me one thing, you said work on one thing for a week. Just start one thing, don't bounce around. So I worked on, I think it was bull flags. Just I wouldn't take a trade unless it was a bull flag. And that helped me tremendously, especially at this point now. I've been trading for several years because I learned patterns now. But sticking to something and that's all you trade, that's it. Whether it works or not, just got to stick to that one thing for a minute to see where it works for you.
Mm-hmm. I remember that.
Yeah.
Because Ray is somebody I worked with for a time, and there was a period where the problem became strategy hopping. Kind of like you knew a little about a lot, and so because of that, it's like, okay, I could do this and I could do that, and I see that and I could do that, do. But it wasn't really going anywhere.
Yeah.
All right. And so, like Ray mentioned, I had them, hey, this week, all you're looking for, all you're focusing on is this one pattern. And then instead of it being you got 5 different strategies that you're about a 4 out of 10 on, hey, now you're an 8 out of 10 with this one. And you understand if I got 50 of them in front of me, how do I know which 5 are the best? How do I know which of the 5 have the lowest chance of failing? Which of the 5 or which of the 50 rather have the highest chance of making a bigger move if they play out? All right, which of these 50 are going to move sooner rather than later? That's what comes when you repeat over and over and over again and you look at the charts and you're studying them and you're back testing yourself, Robert. So on your charts, hey, instead of me just looking at the orb on SPY or Apple today, let me sit down, set a timer for 30 minutes, an hour, and I'm going to go and look at SPY the past 3 months. And I'm going to mark it up the same way I do for the stretch. I'm going to mark it up and I'm going to see, okay, this orb worked well. Okay, what about the 10-minute? What about the 15-minute orb? What about a 30-minute orb? Okay. Oh, so on SPY, I noticed when it's in an uptrend and the orb is in the direction of the uptrend, it plays out. But I noticed that when you're doing a counter trend orb, it don't really work. Or I noticed when you do a counter trend orb, The percentage of profitability, how often it's successful, is lower, but the gains you would get are higher. Okay, so that means that all my orbs shouldn't have the same amount of money on them.
Right.
If it's a counter trend orb, I should put less money because there's a less chance of success, but it can move. If it's a same trend orb, I could put more money because a higher chance of it working out. So I would say stick to it, bro. Orbs, they work. Most strategies work, but it comes down to how we work it. And if we stick with it, if we do let me go look at it 50 different times and see what worked well. Let me jot down the notes. How do I know when to hold, when to get out? All right, that's the process that comes down to it and sticking to it. Don't just hop off of it because it you lost three orbs in a row and then you saw somebody on Instagram that was like, "Oh yeah, this is my IMLFTW strategy." And
So,
yeah, bro.
so why do you see why it's not working for you? Do you understand the reason
Um,
it's working? Is it reversing? Are you waiting for a retest or what? I mean, why it's not working for you? What do
I
you?
mean, I usually wait for the retest, but I guess I don't know enough of the patterns and the complete orb strategy like 100% for me to know even why it's not working. I guess that would be the problem.
Yeah, with the orb, it's really not patterns. It's just like you said, it breaks out. Either if you play the retest, you wait for a retest, and then you get in. I mean, it's kind of a simple strategy. So there's no
Okay.
pattern. It's all about the what your strategy is with it. Like, are you doing 15-minute and then you go down to the five, or are you staying on the 15-minute and just playing it out of the 15-minute? I mean, how do you play your orb?
I started at the 15 and I switched. I don't know, maybe my friend told me wrong, but go to the 1 minute, wait for the retest, and then essentially put your position at that point.
Personally, this is just me. One is busy as shit. I think maybe a 5 minute. If you go from 5 to 15, those correlate better to me if you're gonna go down. Because 1 minute is really noisy and busy and has a lot of moves, and you're jumping at every little thing. Versus if you're looking at a five or something, it has less moves in the 1 minute. It only has it just there's one move rather than five.
Oh, okay. So yeah, for some reason I thought that that's what you were supposed to do was go from 15 to 1. I didn't even know that going to a 5 minute would be different.
Everybody has
Um,
different strategies, but to me, that's what when I do the orb, I do 5 and 15.
okay,
But-
okay.
And because it's less movement, right? Would
Yeah,
you agree, Jordan? Or
So just so that there's an understanding of Robert, it's not to say that it's wrong to do the 1 minute. It's not wrong, right? For just words. It's not wrong. But there's a key difference between a 1 minute time frame, a 5 minute time frame, a 15-minute time frame. And what Ray is talking about is the amount of candles you're looking at, the cluster of candles that you have when you have a 1 minute chart and it looks like, just a bunch going on versus a 5 minute chart that could be more clear, right? And your 15-minute chart that's clearer than that. And so when you're learning and getting used to things, going to something that's more chaotic can be a lot more challenging, right? When you're first learning how to drive, you start off in the parking lot or in the back road somewhere,
sure.
and then you still are okay. You're just gonna drive down the street in the neighborhood, no cars. You don't just hop right on the highway where there's a bunch of things going on, a bunch of movement, right? So that's the 1 minute that Ray's talking about. It's a lot going on, and so it can
I
be
see.
overwhelming.
Okay. I
So
appreciate that.
yeah, I would side with what Ray is saying, and that's what I meant when I was saying go look at the charts and just go back. Is you can look and you can get a feel for it yourself. All right, nothing wrong with trading the 1 minute, 5 minute, but you will find where you feel comfortable, where you feel profitable, and where you have the biggest likelihood of success. And then that's where you stick to it.
Okay. Okay. I appreciate that, guys.
Yeah, man. I appreciate you asking. Thanks, Ray, for chiming in with your personal experience as well. What other questions we got? Warren, anybody? Breen, Shanice.
Yeah, the reason I keep hopping on because I've been through a bunch of this stuff, learning. I
Mhm.
just every mistake that's been made, I've been there as a trader. Believe me, I'm still making mistakes.
Yeah. It doesn't stop, bro. I think that's another thing as you go on your journey, Robert. Understand and be real with yourself with the fact that there will always be slip ups. Like there's no perfection. Like I just said earlier, I had two losses this week because I was jumping the gun on something instead of just sticking to what was working already. It happens. And I was quick to catch myself and be like, all right, Jordan, there's no, I shouldn't have those two losses. Not because I'm a flawless trader who never loses, but because I stepped outside of what my intention was in the first place for the trades I was taking. I mess up too, bro. It happens. You'll have some slip ups, catch them, and make sure they don't happen as frequently. Catch them and make sure that they're $100 losses and not $1,000 losses. Right.
Right.
And you just keep going with that, and it works out over time.
So I mean, I guess it could be a little bit rhetorical in a sense, but basically just master, or quote unquote master one strategy before you start trying to learn others. That would
You,
probably make more sense.
you
Or
can. I would, in my experience, there's kind of two different lanes. So for what I've seen with myself and with other traders, is there's kind of two different routes. Some people are more comfortable with trading a certain basket of stocks. Hey, I trade Apple, SPY, and Meta. I look at just those three. I've gotten comfortable with them. You kind of get a feel for it. Like I look at the same thing every day. I kind of got a vibe. I caught the vibe. Right?
sure.
And there's pros and cons to that. Sometimes you end up forcing stuff because you're so focused on just these three. They can have trash setups, but that's all you trade. So you're gonna trade it, right? Uh, there's other opportunities that you might miss out on. The setup on Tesla might be beautiful, but you don't know that because you're only on these three. Pros and cons. I am more of a patterns and strategies type of trader where if it's any stock that fits these criteria, I'm pretty much good to go. I'll run it. Right. So it could be the orb, and I would have, okay, here's the orb, but here are four extra criteria that I've learned work best with the orb. All right. Now, hey, it could be whatever stock, but if it does this, I'm on it because I've seen that typically that thing works out. So in the beginning, I would say, yes, bro, stick to one thing, create the habit of sticking with one thing, tracking that one thing. And then after you do it for 50, 60, 70, 80 trades, or even if they're paper trades, they don't have to be real money in the beginning.
Right.
Hey, something with this and me is not clicking. And then either you pivot or you try to fix whatever it is that's not clicking. And that again is just whatever feels most comfortable to you.
All right.
There's
Thank
no
you.
bad questions. Yeah, bro. There's no bad questions. We got a question that's more technical. Oh, so you asked me one on one. Okay, yeah, no problem. Just text me, bro. But you have another question. Do I believe a day trader can do this full time, or should they always have at least a side gig? You can do it full time. So you can do both. I would say there is room to do both. I was thinking about the other day where personally I was like, man, I wish that instead of leaving my job at 22 years old, I stayed till I was 27, like I had originally planned. My original plan was to stay till I was 27 and then leave my job. But I left after a year and I was 22. And I reflect from time to time on how if I had kept that job it would have allowed me to not be so deep in the chart. So yeah, there'll be things I didn't learn, experiences I didn't have, all of that. But I'm confident that my portfolio would have been a lot different over the time because I have this extra income that either I can route into my trades or I can live off of one income and just focus on growing the other, right? There's moments that I had where I was having bad trading spells. I started traveling a lot. And for some of y'all who know me, there was a long period where if I was traveling, that next week of trades would be just horrible. Like I forgot how to trade. And so it's like, damn, I gotta pull money out of my account to pay for stuff, but ain't no money getting made this week, this month. That's tough. You know what I'm saying? And it would be different had I had the side gig, had I had something. So I would suggest as you're developing, and I'll share another part as well. As you're developing, have something on the side. Have the cushion so that you can live off the job and your trading can stack and there's no pressure. There's no pressure to grow as fast as you can. There's no pressure to say I got to make $4,000 trading this month or I'm gonna be evicted from my house. I'm not gonna be able to have my food. Right? Like Ray just said, your mind processes differently when you have pressure. It's different. Right? You don't want to trade out of that desperation. So do that. When I left my job, this is the thing I did. I did this right. Before I left my job, I only lived off of my trading money for 3 months. So I had the confidence in myself to be, all right, I can do this. I haven't been touching my job income. Okay, cool. But it would have been nice to have, even now, myself. I'm like, dang, bro, I could grab like a remote job real quick and just throw that into leaps. I could just throw that into long term. I could just I could just use it as lotto trade money. Whereas like, hey, bro, cool. I do this job. I get $500. I get $1,000, whatever. I'm throwing it on an earnings trade that could go to zero. I don't care. It's okay. I don't need for it. But if this pops off, hey, I know we seen some earnings that if we was in them, they would have been amazing. All right. So I would say have the side gig, bro, in the beginning until you feel very comfortable with where your positioning is. And if it doesn't hinder you, bro, the goals vary from person to person. The goals vary. But a big lesson I learned is that we we focus too much on how fast we can make some money and how much we can make when we really need to focus on how little we can lose and how we can guarantee the best we can that we make money. Again, market goes up and down every day, but there's no time where the market's been red for 5 years in a row. Guaranteed success. Took longer, but guaranteed versus trying to pinpoint up and down. Good question. Good question. Good question. I'm glad it's making sense, brother. What else we got? Any other questions, comments, insights, ideas, thoughts? Can I go over a trade for you? Would you want to do that now or would you want to do that privately? Like privately, we could go more in depth, but I know now could help people too. Now would be okay. Talk about it. Talk to me. If anybody has a question for the good of everybody, fire away. But if no, then we can go over a trade, right?
Oh, shit. Okay. Oh, yes. Sorry about that. I'm looking at MFMM Microsoft,
Mm-hmm.
and I know It had a big pop on Friday, but I don't trade Friday, so I missed that pop, that move. But I know there's possibly more juice in there. It looks like it's a little overextended, but I know there's more juice. What do you think about a swing on that?
I like it. I like it. The reason I like it is I had it already marked for this bull pennant a while ago.
Yeah.
It finally broke it. I saw it on Friday myself. I said, dang, I've been waiting for that.
Can I
Oh,
tell you what I was waiting for on that one? Like if you go to like the 4 hour or the hour, and it was doing like the it was basing right there, like accumulation type thing,
mm-hmm.
and it busted out of there on Friday, and I didn't catch it.
Yeah,
If you like draw a box from, yeah, that's almost like a little, that's a penny also. So
I see what you're saying. You're talking about kind of like
yeah, right there. And that's I've been waiting for that for a while, and I missed it on Friday.
go for the gap fill.
Yeah, I'm looking at that. Yeah.
Yeah,
So you think it's still good? Plus, there's a lot of AI juice in there too. So
yeah. Go for the gap fill would be my target, but I would. The smarter thing, of course, would be trying to catch the pullback to 433 if there is one.
if there's,
We've been seeing with these things that it really they don't be pulling back like that.
I'm thinking about going like to mid-June on this one or something.
Yeah. It looks good to go though. This is a very clear breakout.
Yeah. And even if
Uh
you measure that flag hold too, even a measured move would still gives me time.
yeah. Maybe go half. Go half position now so you don't miss if it keeps running. And then if it does pull back, then you can go in with the rest.
Yeah.
Yeah, that would have it coming up here.
I did SMCI last week and it popped for me when yeah this week actually, but I got
Mhm.
out at like 42 and it kept running, but I had like 150%. I had like 150% gain. I was like, I got to get out now because I didn't want to lose the profits. Is that a bad thing? Because I don't know when to get out if I'm winning.
So instead of getting out from fear of losing profits, roll your contract. So, for example, I had calls on Red Cat. I got calls on Red Cat on Tuesday.
Damn.
On Thursday, it went up 30%.
Yeah.
And I was like, okay, well, it's up 30%. Right. So I got I got contracts that expire in January of next year.
Oh wow.
Right. So six months out, but my contracts were up 140% or something.
Right.
So instead of closing out completely in case it does keep running, what I did was I closed out those and bought a further strike. I had the 20 strike for January, and then I just moved into the 30 strike instead. And
Okay.
I let some of the profits pay for that new position.
That's what I should have did. Okay.
I let all the profits pay for the new position.
Right.
So yeah, that way you still have exposure to the move. You can remove some of your capital that was at risk and you good.
Right.
So either way, if it don't go up at all, there's no real money lost to me on the original position because I already took my profit.
Yep. Yep. Yep.
You know,
So I think I'm gonna go ahead and jump on MS Microsoft on Monday morning swing.
I would just leave some in the tank for Microsoft specifically in case it does pull back and you get a better retest entry off of 433.
Yeah. But if it pops, just go ahead and get in. Because I mean, with the mid-June expiration, the entry doesn't have to be pinpoint, correct?
It doesn't have to
Or
be pinpoint, but the
would it be
better,
nice?
the better.
Yeah, true.
You
Yeah.
know, you don't want to, in the case of this, knowing yourself, knowing your role, right, and measurement, you don't want to be so caught up in what if I miss it that you buy it at the top and then you're in it for 2 weeks while it's pulling back and now you're down. To your point, if you get 4 months, hey, if it pulls back for 2 weeks, I don't really care that much because if it continues, I'll still be profitable at the end of the day.
Right.
But if it does keep running and you wait, you miss it. And then you have the feeling, it's again depends on how you process. Can you stomach the dang? I thought it was gonna go up and it did go up, and I was waiting for the good entry and I didn't get it. Some people
Yeah.
can, some people can't.
Yeah,
So that's why I'm suggesting you, if you know you want to be in the move, grab some Monday and
mhm.
then, sorry, not suggesting. I don't give any financial advice or
You don't
suggestions.
do that.
Whew, forgot about that. What I would do in your situation is I would get some now. Okay, cool. If I'm allocating $1,000 to the trade, 5,000, whatever, put half of it on there now. And then if it does pull back, cool. I can lower my cost and I'm still in the position with what I wanted to be in the position with.
Yeah.
If it runs and doesn't pull back, cool. I'm still getting paid on the move that I was looking to happen.
Yep. What do you think about everything? Since everything's been
Mhm.
running. Are you like the top? I mean, you like to kind of see where the tops and stuff are, right? That's how
Yeah.
you've predicted that before. What are you seeing right now as far as tops, like even for SPY or whatever? Is it overextended at this point and needs to turn around yet? Or I mean, that goes for the whole market, really.
The market as a whole is, I would say it's not as bad as it looks. So one, we can have healthy moves up without deep pullbacks because SPY also had a week of consolidation. So from, I think it was like last week SPY, or yeah, not this week, but last week SPY didn't really move for the week,
Yeah.
right? It just moves kind of sideways. So it didn't drop, but it paused, kind of recalibrated, right? And then it continued. Right now in the market, we've been seeing the past, I'll say past year or two, it's been very theme heavy, where there will be certain themes, not just sectors, but certain kind of themes or concepts that are carrying the weight in the big move. So we had, if y'all remember about a year ago, gold and silver were setting records every single day. Gold and silver, gold and silver, gold and silver, new all-time high, new all-time high. Now they're
Yep.
not doing nothing. We had SNDK and different AI companies just,
MU
yeah,
going
right,
crazy.
every day, new all-time high, new all-time high, new all-time high. And some of them still are. We had crypto stocks at one point just popping off, popping off. We had IREN, RGTI, right? A lot of those popping off. So you have quantum, you have nuclear, you have solar at one point was popping off. So the play that I'm on now and the way I'm maneuvering is I'm looking at those themes, understanding macro situations, and I'm looking at what themes haven't popped, right? So instead of trying to catch something that needs to come down all the time, I'm looking at, all right, nuclear energy is still about to be on the come up because they're going to use that to power all these data centers, right? Oh, lithium, for example, uranium, like all these different kind of things, quantum, all these different things that are being integrated and money is starting to flow into them. That post I made with the leaps recently was me, and you've seen me post before, is me posting about companies that are getting government contracts, government funding, insider buying. That's something that you've seen me talk about all the time. So when your company gets a government contract and the CEO, the CFO, the director, the EVP in the company are loading up on shares, hmm. Right? I'm like, all right, cool. I'll roll with it. RCAT, I think it was no, it's RXC. I mean RXRX. Anyway, I posted the reasons on the Instagram. But one of those companies was working with like powering the chips NVIDIA uses. All right, so it goes hand in hand. We over here doing all these military moves. Trump done went and got the Venezuelan president. They going back and forth with Iran. All this stuff is going on. Okay, Red Cat, I think it was, makes drones that the army is buying. Yeah, I'm thinking that's what it was that they did. So I'm looking at those things and I'm like, all right, yes, a stock can be topping out and drop 40%, 20%. And I can make money on that. But I can make more money on these stocks that are going up 500% for the year. These stocks that are doubling and tripling within 2, 3 months. That's what I'm on, brother. All right. We are at 1 hour and 30. We could take about one more question.
Uh-oh. What about you working on AI something? You said you was working on some AI stuff.
That's private, right?
Okay.
That's for people who already know. Um, yeah, it's private. I don't mind sharing a little bit. I have been spending the last about 3 months working on coding and developing some AI related systems to help with people managing different aspects of the market. Some of the things that I was talking about today. So there will be more to come. But I have been in the lab working on something to help people using AI. Because I know it's a lot of people who might be in their 40s, 50s, and they're like, I know this AI stuff could help me, but what do I say to it? How do I program it? Beyond what stock should I buy? What's right? Like that, that's very, very surface level compared to the depths that these things can really do. The programs that we can really code where I had I'll drop this and this, I'm gonna cut it off here. I um I like looking at put to call ratios for upcoming earnings. I made a post about it with Nvidia. Nvidia had earnings like 2 weeks ago. It didn't move at all. Tons of people lost money because they were betting on it to move and it didn't move. And the put to call ratio was kind of clear that there was like no real heavy siding. Now, not that it's a guarantee that that means something all the time, but now I created a scanner that I can run the scanner and it'll pop out, hey, here are the next 5 days of earnings. Based on the parameters, here are the next 5 days of earnings with the top three stocks that have a very skewed put to call ratio. So I know ChargePoint, for example, has earnings next week, but ChargePoint might have 200,000 puts that are held, but only 50,000 calls. All right, so I'm like, oh, huh. Let me do some more research. That ain't gonna tell me the full story. All right, but it's leaning lopsided one way, and that's something I could just do with the click of a button, rather than what I used to do, which is type it in. Okay, write it down, type it in. So that's what I'm working on. There'll be more to come. That's all. Y'all got any other questions? Feel free to reach out to me directly. Thank you all for showing up, popping in the chat, cutting the camera on, making some noise, asking some questions.
Appreciate everything, Jordan. It was really good.
Sure thing, bro. Glad to help. If you need anything, bro, just shoot me a message. Shoot me a message anyway. We'll just chop it up, bro.
For sure, man.
Yeah, no problem. Happy to help. Happy to help. Thank y'all for coming. I might do this more often. We'll see. Yeah, y'all have a good day. I'm gonna try to get the recording out as well. Appreciate y'all showing up. Have a great weekend.
You too, man.
Thank you, bro.
All right.
All right. All right, James.